If you haven't heard the terms cash basis or accrual basis yet, you will at some point throughout the course of owning your own business. Today, I'm going to explain what those two terms mean and how they affect your financial statements. Before we even get into it, I've given you a link below to a short quiz that will help you evaluate how well your bookkeeper or bookkeeping system is working for your business. For easier consumption, I've broken this video down into 4 simple parts. In the first part, we're going to define cash basis. Then we will define accrual basis. Then we will talk about how tax reporting versus management reporting is different. And then we'll finally talk about which basis is right for your company. Let's get started by defining cash basis accounting. In cash basis accounting, sales or revenue and expenses or purchases are recognized at the time that cash changes hands. Now, this can look 2 different ways. One example would be if you go to Target, say, and make a purchase. In cash basis accounting, the sale, so Target would record the sale that they made to you as of that date of purchase because cash changed hands in exchange for you taking the goods out of the store. If you were to record that purchase on your own books, you would record it as an expense and you would record it as of the date of that purchase because that is the day that cash changed hands, and that's how you would record it in cash basis accounting. You can also do cash basis accounting where it's collected at a later time. So let's say that you have customers that you bill today, but they pay you sometime later in the future. So if you're doing cash basis accounting, if you make the sale today, but you haven't received the cash yet, then that sale doesn't get recognized until you actually receive the cash. So you might make the sale on June 5th, but if you don't collect the cash until July 20th, that sale doesn't get recognized as revenue until July 20th. Same thing if you make a purchase. So let's say you purchase something on account. So you purchase something from the parts store because you're a mechanic and you buy it today, but you don't pay for it until a month later. So you buy it on June 5th, but you don't pay it until July 20th. You wouldn't recognize that expense until July 20th if you were doing your books on a cash basis. An alternative to cash basis accounting is accrual-based accounting. And in accrual-based accounting, you recognize revenue and or purchases or expenses as of the date the transaction is executed, but not necessarily that cash changed hands. So in my previous example where I had said that you made a purchase on June 5th, but you didn't pay for it until June 20th, instead of recognizing it, or July 20th, I should say, instead of recognizing it on July 20th when cash changed hands, in accrual basis, you would recognize it on June 5th, the date that the sale was actually made. Same thing if you, the sale or the expense, it doesn't really matter. So if today you made the purchase, but you haven't paid for it yet, it gets recorded as of today's date. And then when you make the purchase later on, it goes into or comes out of an account called accounts receivable or accounts payable. Now, it is common for many small businesses to use one type of accounting for tax reporting and another type of accounting for their internal financial statements or for management reporting. So oftentimes they will use cash basis in tax reporting, which means, what you give to your tax preparer to use to put on your taxes at the end of the year. Oftentimes that's done on a cash basis. And the reason for that is so that basically the main reason, and there are many reasons, but one of the main reasons is so that you're not paying taxes on cash that you haven't received yet. Because let's face it, sometimes we sell something to somebody and we never actually collect for that sale. So we really don't want to pay tax on that if we don't have to. And so if that never gets collected, then we didn't already pay the tax and then have to figure out how we're going to, backtrack and get that back. But for management reporting, maybe a cash basis is right for your business, but an accrual basis might be better. And we're going to take a look at that right now. So here we are in a QuickBooks Online sample company, and I have a profit and loss statement up, and I also have a balance sheet up. And I'm going to flip-flop things a little bit here. We've been talking about cash basis first and then accrual basis, but right now I'm going to flip-flop that, and I'm going to look at accrual basis first and how it affects the financial statements, and then we're going to go to cash basis so that you can kind of see the difference. So remember how I said in accrual basis, we're recognizing transactions as of the date that they actually occur, but cash does not necessarily change hands. So if we're looking at this profit and loss for January 1st through April 26th, and we look at the income that we have generated in our business, so I'm just going to collapse this down just so we have one big total for all of the income. It's saying that we've made $9,959 in sales. However, we haven't necessarily collected that whole $9,959. Some of it might be something that we've billed to a customer, but we haven't been paid for yet. And the way that we can tell the difference between those two is if we go to our balance sheet and we look at the accounts receivable balance, we can see that as of that 9,000, whatever it was, dollars, we're still owed $5,281. Then if we look at our expenses, we can see, and if I just collapse this here, that we've spent $4,952 on purchases, but some of those purchases we may not have paid for yet. And so we're going to find the ones we haven't paid for over in accounts payable on our balance sheet. So if we click over here to our balance sheet and we scroll down to the liabilities and equity section, we have an accounts payable balance. So of those purchases that we made, we have not yet paid for $1,602 of those purchases. So that's what it looks like when you're doing bookkeeping on an accrual basis. Okay, so now let's see what this same thing would look like if we were running our reports on a cash basis. So if you're using QuickBooks Online, it's very simple to toggle between the two. You simply just have to switch this little radio button here to go from accrual-based accounting to cash-based accounting. So I'm just going to run this report on a cash basis, and if we bring this down, we see that we now have quite a bit less revenue because this is reflecting only the amount of revenue that we've actually collected in cash payments, cash, credit card, check, whatever it was, but payments that we've received in this time period, not necessarily sales that we've made. So it changes significantly. If we go back here to accrual basis, we see that we made, almost 10 grand in sales, but if we go to cash basis, we're seeing that we only made $5,230. So you can see how, depending on the way you want to do your reporting for management purposes, it's important to kind of know the difference between the two and which one is best for your business. I also just want to point out that if you are doing this on a cash basis now, so we see $5,230 of 27 cents of income. We should not see anything on the balance sheet for accounts receivable or accounts payable because it's almost like those things haven't really happened yet because we don't count them until the cash exchanges hands. So if we look at our balance sheet over here, we now see, and I've changed it to a cash basis. So we had accounts receivable up here in the assets section before, and that's no longer there. And then down in the liabilities section, we had accounts payable, and that's no longer there either because now it's reporting on a cash basis. So as far as it's concerned, those transactions haven't taken place yet. And I don't want to get into the nitty gritty of where they are because they could still be recorded on your books, but they're just not going to be showing up in those places. But I don't want to get into that for the purposes of this video. I have given you a general overview of cash versus accrual basis accounting and how to pick which one is right for your business. Don't forget, if you want to know how your bookkeeping stacks up, click the link below to take the quiz. If you found this video helpful, please give it a thumbs up, and if you haven't already, subscribe to the channel. Comment below, which industry are you in and which basis do you think is right for your business? Thanks for watching, and see you next time.